Larry Berman here, and here's what's on my radar this week and should be on yours too. It's probably no surprise by this point. Anybody who's a market participant knows exactly why the market's cratered late this week. In fact, I saw a stat today that the Dow Jones Industrial Average is now down 11 of the last 12 weeks or something like that. And apparently the last time that happened was in the 1930s. So I haven't vetted that data yet. It just kind of hit my desk about an hour ago. We're just past the close of market on Friday. And, inflation expectations and what the yield curve is doing and the cost of money has everything to do with the future and the next number of months and probably well through all of 2023 in terms of how the markets behave. So, there was a broad expectation, including myself, and I still think this is very much in play. Very influential people like Mohammed Al-Arian and some others have come out and said, no, we haven't reached peak inflation yet. So the debate continues to rage. But the numbers that came out today, you can see here relative to expectations, pretty much across the board, very, very disappointing from a perspective of inflation expectations. Have a look here. U of Michigan consumer sentiment took a major dive down. Obviously, Main Street is feeling it in the pocketbook. And the last time we saw numbers like this, again, was at the bottom of pretty much every other major market sell-off. And so when you think about that, you say, oh my goodness. And then you say, well, what happens a year from now when sentiment's this bad? And historically, going back into the 1970s, where we have these consumer sentiment numbers, actually markets do very, very well and well above average over the next year. The difference this time is all those other periods of past crises when sentiment was this bad, the Fed was easing already, and we know they can't ease anytime soon. So you've got this conundrum. It's going to beat on asset prices for a while. We should probably get some okay data over the next few months, and markets should stabilize here, but there's certainly no guarantee on that. But that's the card I'm playing right now. When we look at forward-based inflation measures, this is the five-year swap. So what is the inflation expectation for 5 years from now? Again, this is not opinion-based. This is not survey-based. This is actual market pricing. And when you scroll back over time and we look at this thing going back 20 years, we see, hey, the 5-year inflation expectation number was in the 3% range, and it was prior to oil prices breaking in 2014, 15, 16, we're fracking. So, we probably inch up towards that longer term inflation expectation in the 3% range, and that should have a negative impact on asset prices and multiples as well. The yield curve pretty dramatically came down about 14 basis points. So this is the US 2s, 10s, on the cusp of inverting again, and we all know that portends recession, 12 months out or so. So we're getting close to that. We were good for a few months, but remember when the May market collapse happened, that yield curve was in the 20 basis point range. It's now sub 10. And again, that recession's coming. That recession coming should mean the Fed does need to pause or moderate at some point. The market widely expects the Fed to do 50 this week and 50 in July, and the debate then going forward, is it more 50s or do they slow the pace down? And I would bet slow the pace down is where they're headed. I do think we will see inflation moderate. What I've said is it's going to be stickier at a higher level for longer than the market anticipates at this point. So quick look at the world index, the Vanguard Total World ETF, our focus this week. What's the world doing? This looked really good until 2 days ago when late on Thursday we broke key technical support. This was looking like a consolidation wedge to me that was going to cause another move up here. That's what we were playing for. It doesn't happen. It broke down. There's an awful lot of people negative and short this market, and I think from a sentiment perspective, that probably means we squeeze some shorts in and get into this range before we break down. Folks, that's the bet you got to make in the next few weeks and months ahead. My bet is we bounce here, but by no means am I bullish. I'm talking about being very, very tactical here. So for the bull and bear picks of the week, nothing's really changed in our lens. I like for a trade, buy what you like. You can buy some high beta names here. A lot of things have been pushed to the lower end of their ranges. So I think you nibble on those. If it breaks, tight stops probably in play for those. In terms of being cautious, this is not a time to be bullish. This is not Larry saying buy the dip, go all in. We're in a very cautionary market, probably well through 2023. Have a great week, everyone.